Well, the U.S. stock index futures pointed to a lower open today as traders eyed a potential breakthrough the elusive 2,000 mark for the Dow Jones Industrial Average and focused on earnings. Now, on the data front, Monday will see consumer credit for November released at 3 p.m. Eastern Time. On the earnings front, Acuity Brands, Commercial Metals and Global Payments are all set to report before the bell. Barracuda Networks and WD-40 are both due to report after the market close. Let's see what the figures are like there for the Dow Jones Industrial Average at 19,889, down 0.04%. That's what the market is tilting towards. And S&P 500, 2,270.50. That's down 0.4%. And Nasdaq 5,007.25, up 0.06%. In Asia, shares were higher today following the Dow Jones coming within inches of hitting the 20,000 mark during last Friday's session. The Australian ASX 200 finished up 0.9%, seeing broad gains across all sub-indexes except for materials and gold. In South Korea, the Kospi wavered between negative and positive territories and closed down 0.02%. China's Shanghai Composite closed up 0.55%, while Shenzhen Composite ended up 0.303%. In Hong Kong, the Hang Seng Index was up 0.12% by mid-afternoon. Japanese bourses are closed for a holiday. And back here in Nigeria, the Debt Management Office last week released its bond issuance calendar for the first quarter of 2017. Now, the calendar indicates that the federal government will issue about 430 billion naira of local currency bonds during the first 3 months of the year. Now, let's cross over to the FMDQ debt market and see how this will be driving sentiment this week. And I'm being joined by a fixed income dealer at Axis Bank PLC, Femi Akinyemi. Good afternoon, Femi. Thank you very much for joining us.
Good afternoon. Thanks for having me.
Now, the first quarter debt issuance calendar showing the FGN's plan to borrow in line with the expanded 2017 budgetary provision was released last week. How will this likely influence trading this week?
Well, from the bond auction calendar that was released, observed that the government is willing to borrow about an average of 20 billion more on a monthly basis relative to Q4 2016. And with that, market reacted to that intention by the government. We saw market opening on a very bearish note. We saw counterparties selling across board with the expectation that yield will go as high as 17%. Currently, the long end of the curve, that's a 20-year bond, opened at around 16.4, 16.5, but we saw markets sell that up to as high as 16.7. And the short end, even the short end, that's the June 2019 bond and the 2020 bond, traded as high as 16.4. So the general sentiment is expected an increase in yield going forward. For the Treasury bills market, opening market, we saw a bit of buying, but with focus on the short and the medium term of bills. That's bills between 3 months to 6 months. However, with the release of the OMO notice in mid-trade, that's mid-trade around 12:1 p.m., we saw market retrace. We saw some selling in the Treasury bills market. So the general sentiment in both markets is an expectation of rise in yield going forward.
Now, what is your general outlook for this market, the debt market for the week?
Well, like I said, the general sentiment is expectation of a continual rise in yield, both in the bonds and fixed income market. We know that there are a number of maturities, particularly next month, February, about 590 billion of OMO bills will mature. So we expect that in line with government's intention to borrow more, we'll see more OMO auctions. And OMO auction at 18.6, that's That's a yield of about 22%. We obviously keep the market bearish, keep the market at a yield of 17%, the bonds market. So basically, the general feeling is that yield will keep going up. Government will borrow more, and basically, we just expect markets to remain bearish, basically.
All right, thank you very much, Femi, for those updates. Femi Akinyemi is a fixed income dealer with Axis Bank PLC. In other news, the People's Bank of China says its monetary policy will be kept prudent and neutral in 2017, echoing the tone set at the Central Economic Work Conference. In the statement issued after a work conference, the People's Bank of China also promised better adjustments of the monetary floodgates to ensure stable liquidity. The bank says financial services should accommodate the need to advance supply-side structural reforms while strengthening support for national strategies. The bank also said it will deepen financial system reforms and improve policies and other conditions for the internationalization of the RMB while guarding against financial risks. Venezuela's President Nicolas Maduro has announced a 50% hike in the minimum wage and pensions, the fifth increase over the last year, to help shield workers from the world's highest inflation rate. The measure puts the minimum monthly salary at $40,683 bolivares, about $60 at the weakest exchange level under the state's currency controls, or $12 at the black market rate. Maduro has now increased the minimum wage by a cumulative 322% since February 2016.